Okay, 10 questions to ask a financial advisor. I'm Eric Maldonado. I am a financial advisor, a certified financial planner in particular. I own Aquila Wealth Advisors, and I think we'll uh, hear more about what that means as we answer these questions. So this is just from NerdWallet. You can Google search what to ask a financial advisor. I thought I'd give my commentary on what um, this reporter, Andrea Coombs, wrote on at the end of 2022 in terms of what to ask a financial advisor. So they have 10 questions here. Are you a fiduciary? Number one, fiduciary is kind of a buzzword in the financial planning industry because people want to know if the advisors basically conflicts of interests are what they are. And a fiduciary actually is more of a legal term. So usually you hear that word historically in like attorney client relationships. It really just means that an advisor has a legal obligation to do what's in the best interest of the client versus to do just what is suitable. In other words, uh, some advisors that work at broker dealer companies, um, so they're like a registered rep of a broker dealer, and they have like a series license, Series 7, Series 24, Series 26. Basically, they're licensed to sell products essentially, and that product has to just be suitable for the client's situation versus the best interest for the client. In other words, the advisor doesn't necessarily have to say in the suitability standard mode that what they recommended was the best option. It was just suitable for that situation. There could have been a bunch of things suitable. Basically, what this article is trying to get at is, does the advisor have uh, a motivation or a financial incentive to sell products in a way that doesn't necessarily uh, put your interest first. And I am a fiduciary, so maybe that goes without saying. So how do you get paid? That's another great one. Kind of goes along with fiduciary because as long as you understand how the advisor gets paid, at least everyone there at the table knows what the motivations are. So some financial advisors, that's the other hard part, is the word financial advisor in America isn't very like formalized. In other words, almost anybody can call themselves a financial advisor. Now there's people that are like financial coaches, financial therapists, financial counselors, because they're trying to get away from having to be under like an investment advisory legal responsibility. But how you get paid is a good question to ask because you want to know, does the advisor get paid as a percentage of your investments to be managed, which is a fee. You as the client pay that fee as opposed to paying, for the sale of commission-based products or mutual funds that have expenses inside of them. Or does the advisor get paid like a retainer or a subscription or basically a fee throughout the year for advice? Or does the advisor get paid for insurance sales? Just so that way you know what the motivation is. And of course, they talk about fee-only advisors here, which is what I am, which basically just means that the only fee the advisor gets is from the client as opposed to some sort of kickbacks or bonuses or other commissions from a broker dealer or an insurance company for essentially selling their product. What are my all-in costs? Basically just another way of saying how do you get paid. You just want to make sure that there isn't some other convoluted ways that the advisor gets paid, and if the advisor's having a tough time even explaining how they get paid or doesn't really know how much they get paid to sell a product, that's kind of a telltale sign that they're not really um, in that scenario fiduciaries or a fee-only advisor, which is fine as long as everyone knows that and you understand. You're just trying to understand costs. What are your qualifications? So, like I said before, in the USA, there's not really um, like any restrictions from someone just basically saying they're a financial advisor. you can kind of just be one, especially if you're with a broker dealer company or an insurance company, and you get a few licenses maybe, which makes it harder for the client to figure out, who's qualified. So one, I'm biased here, but the CFP designation, which they talk about right here, is the kind of the gold standard, because the CFP, which stands for Certified Financial Planner designation, at least means that the advisor went through some rigorous steps to become that. Usually there's thousands of hours of experience required. There's a test that has to be passed after you take a certification program, which is months long of schooling. That's after after you get an undergraduate degree. So there's a lot of time and knowledge and tests that take place when you're a certified financial planner. And then how will your relationship work? This is probably more just getting an idea of what's the expectation, what are the advisor's expectations, what are the client's expectations, in terms of even how often you meet, what are the expectations as far as during those meetings, what are we going to cover? Those are kind of clarifying questions that the advisor should go over by the time you're done talking. And what's your investment philosophy? Getting an idea of if you are going to talk about investments, and having the advisor either be delegated the investment accounts to utilize, or outsourcing to them, or working in tandem with them on your investments, whether it's in your 401k or an individual retirement account, brokerage account, trust account. You want to know if the investment advisor, for example, is more of a stock picker, if they're going to pick individual stocks, or if they're more of what's called like a passive index fund investor, where it's more buy and hold indexes, which is a bunch of companies, more diversified. Or are they more into maybe like alternatives, or do they put in there like private equity, some more esoteric funds that aren't necessarily your basic publicly traded companies, that sort of thing? Do they do individual bonds or CDs? That's kind of what you want to be understanding about the investment philosophy. Are they trying to stick with the plan and be consistent with it, or are they trying to be more tactical and kind of go in and out of the market, choose like different types of investment types, commodities, or what's their take even maybe on cryptocurrencies? That's kind of the investment philosophy question. And then what asset allocation will you use? Essentially, asset allocation, the three main asset allocation types are stocks, owning equities, owning a company, like in the S&P 500, just publicly traded companies, Facebook, Amazon, Netflix, any, AT&T, those are all kind of examples of S&P 500, just publicly traded companies, big companies. Doesn't have to be big companies, but asset allocation would be equities, bonds, cash. That's kind of the three asset types that are the major asset types to have in a portfolio. Obviously, the more cash you have in an account, the more, quote unquote, conservative it is, because cash, doesn't fluctuate up and down in a market type stock market pricing. Equities tend to be called more aggressive just because the prices fluctuate day to day. And then bonds would probably be in between cash and stocks in terms of the the risk tolerance questionnaire, which, just because someone has bonds doesn't mean they're set up conservatively, because it just depends on what their time frame is and what they need their money to do. For example, if someone needs their money to grow in order to have enough money to live off of later, and bonds historically don't meet that growth need, then bonds aren't really conservatively helping you get to your goal. So it depends on what the goal is in the time frame. But bonds is owning fixed income investments. In other words, you own the debt of, say, a corporation or the government. In exchange for that debt or that note that you own, The government in the case of treasuries, or the company in the case of corporate bonds, pays you back interest. Essentially, you get an income, a fixed income. That's why they call it fixed income, because it's a stream of income you get fixed from the bond, or the certificate of deposit, CD. So that's basic asset allocation: stocks, bonds, mutual funds, or stocks, bonds, cash. There's other kind of satellite or other asset allocation types that are more secondary to that. That you could put maybe real estate in there, but that's more like if you're owning direct real estate, you're not going to really be able to put that in a portfolio outside of like a retirement income trust, a REIT. But even REITs, depending on the type, can be an equity REIT where you own companies that have real estate, or a debt REIT where you're owning mortgages or loans. There's commodities that'd be like precious metals, gold, silver. Cryptocurrencies might be another asset allocation type. And then what investment benchmarks do you use? So this is just getting an idea of like you're trying to compare, if you're trying to get a comparison. So the S&P 500 is probably the most famous benchmark, because it's just benchmarking essentially the entire US stock market. It's 500 companies, which is, roughly 80% of the entire US stock market valuation. So basically, when people say the stock market, a lot of times they're using that interchangeably with the S&P 500 index. And people want to compare sometimes with an index to see what they're doing, or you just invest in the index, the S&P 500, then you get what the benchmark is. Who is your custodian? The custodian is the company that actually holds the monies. So you don't want your advisor holding your money for you. Obviously, that's illegal, or not shouldn't be doing, unless they have some kind of a different arrangement. But that's exactly why you ask, who's the custodian? Usually it's kind of the big custodian companies. Examples of that would be like TD Ameritrade Institutional, Fidelity, Vanguard, Schwab, and a few other ones that are the company that's actually holding the investments. And that's where you can log in as the client and go view your accounts directly, as opposed to having to go through the advisor to see them. What tax hit do I face if I invest with you? That's a good question. Especially if you have like what are called brokerage accounts, or a trust account that's a non-retirement account with investments inside of them that have different valuations from when you bought it at. So if you bought an index fund or a stock years ago, and now it's changed in value, whether it's gone up or down, if you sell that, and if the advisor is going to have you sell those positions to work with them, you would want to know that beforehand, just to know if you can expect what to expect on your taxes. But for things like a retirement account, an individual retirement account, a 401k, if the advisor is taking that on to manage it, and if they're selling positions inside of the IRA, individual retirement account, or 401k, or other various retirement accounts, then there's no tax implications if you sell stuff inside of those accounts. It's only if they make distributions and take the money out, or if you take the money out. So that's a pretty good list of things to ask advisors. A good advisor is probably going to go over that stuff with you anyways, and make sure you understand kind of expectations, what to expect when investing together, how we work together. Are they a fiduciary? Usually you can kind of see that stuff on their website. And if you don't see that stuff on their website, or if they're not explaining that to you, then that's probably a good indicator that you might need to just understand what they're doing and go with an advisor that is answering these questions a little bit more direct. Hopefully that helps a little bit more. If you have questions you want to ask, feel free to drop them in the comments. You can email me directly, info@aquilawealth.com, AQUILA, and we can try our best to get back to you on any financial questions that you have. Until next time.